Welcome to Simple Investing Secrets, your trusted source for valuable investment insights, stock recommendations, and strategies to help you achieve financial freedom. In today's video, we'll delve into the top 7 long-term ETFs, secure investments for steady growth. So before we start, if you find value in this video, please support our channel by liking and subscribing to our weekly updates. Now, let's get started. Exchange-traded funds, ETFs, are basically bundles of investments, kind of like putting all your eggs in one basket, but in a good way. We're going to explore some great options for people who want to steadily build wealth over the years, whether you're just starting out in investing or you're a seasoned pro. This guide is here to lend a hand. But before we get started, don't forget to show us some love by giving us a thumbs up and hitting that subscribe button. We've got plenty more helpful tips on investing and managing your money coming your way. Now let's talk about why sometimes the boring old strategy of buying and holding on to investments can actually be pretty smart. Last year taught us a valuable lesson. Sometimes just sticking with your investments through thick and thin pays off, even if it's not the most exciting thing in the world. A recent study by Bank of America found that in 2023, only 38% of those big-shot investment managers managed to beat the average market performance. And on top of that, they fell behind by an average of 1.6 percentage points. This isn't just some random blip on the radar, it's a well-known trend on Wall Street. Research after research has shown that the most successful outcomes often come from simply investing in index funds and holding on to them for the long haul. So whether you're a newbie in the investing game or a seasoned player trying to figure out the best moves for 2024, the advice remains the same. Find the cream of the crop ETFs that you can buy and hold on to, and then just sit back and watch your investments grow. If you've got the patience and discipline for this approach, then the following 7 ETFs are solid picks for the long haul, representing some of the best choices for sticking to your guns and watching your investments flourish. Let's dive right in. Number 1. Vanguard SP 500 ETF. The Vanguard SP 500 ETF is widely favored by investors aiming for long-term growth through exposure to the biggest U.S. companies. With a massive asset pool totaling $389 billion, Vanguard SP 500 holds a prominent position in the market. Its expense ratio, a mere 0.03%, translates to a mere $3 per annum for every $10,000 invested, making it an economically attractive option. By mirroring the S&P 500 index, which includes heavyweight firms such as Apple Incorporated, AAPL, and Microsoft Corporation, MSFT, Vanguard offers a straightforward and efficient channel for investing in these industry leaders. While the Spider S&P 500 ETF Trust, SPY, enjoys greater historical prominence, Vanguard S&P 500 distinguishes itself with its lower fees, rendering it a compelling choice for numerous long-haul investors. Despite trailing SPY in terms of assets under management, Vanguard S&P 500 remains a robust contender thanks to its substantial asset base. Number 2. Schwab US Small Cap ETF. Consider investing in the Schwab US Small Cap ETF. This fund holds around $16 billion in assets and has an expense ratio of just 0.04%. If you believe in the long-term growth potential of smaller companies, Schwab deserves your attention. It provides a diversified portfolio of small-cap stocks without favoring either growth or value stocks. By investing in this ETF, you gain exposure to smaller and mid-sized companies, which often have more growth potential compared to larger, more established companies in the S&P 500 index. Currently, Schwab US Small Cap holds nearly 1,700 stocks, with an average market capitalization of around $3.3 billion per position. Investing in these up-and-coming companies can be crucial for capturing the long-term upside of the stock market. Number 3. Invesco QQQ Trust. Investors might find it beneficial to add the Invesco QQQ Trust to their investment lineup if they're looking to tap into the fast-paced growth of the technology sector. This fund, boasting assets worth a hefty $249 billion and carrying a modest expense ratio of 0.20%, mirrors the performance of the NASDAQ 100 index. This index comprises the crème de la crème of tech, featuring the 100 largest companies listed on the NASDAQ stock exchange. The NASDAQ exchange is the stomping ground for tech behemoths like Microsoft, Apple, and Nvidia Incorporated, each boasting trillion-dollar market caps, which reign supreme within the index. Consequently, more than 50% of this ETF's assets are dedicated to the tech sector. While the fund does sprinkle in a bit of diversification by including exposure to other sectors, investors should keep in mind its heavy tilt towards technology, which carries the promise of sustained growth over the long haul. Number 4. Vanguard High Dividend Yield Index ETF. This ETF boasts assets totaling $51 billion and an expense ratio of just 0.06%. If your main priority is steady returns rather than aggressive growth, Vanguard High Dividend Yield could be an excellent option for you. It provides investors with exposure to a diversified portfolio of nearly 500 dividend-paying stocks. In case you're not familiar, dividends are payments made by companies to their shareholders, typically on a quarterly basis. These payments are a bonus on top of any potential capital gains from the stock itself, and they signal that the company is financially sound. Companies that consistently pay dividends usually have stable and profitable operations. Vanguard High Dividend Yield primarily focuses on companies with a track record of offering above-average dividend yields. Some of its top holdings currently include ExxonMobil Company, XOM, Broadcom Incorporated, AVGO, and JP Morgan Chase & Company, JPM. While these companies may not be as flashy as tech startups, they are reliable and suitable for long-term investment strategies. Number 5. Vanguard Total International Stock ETF. Are you considering where to allocate your money? Take a gander at the Vanguard Total International Stock ETF. It boasts a substantial $63 billion in assets and a modest expense ratio of just 0.07%. When selecting ETFs for the long haul, it's paramount to diversify your investments across various regions worldwide. Vanguard Total International Stock accomplishes precisely that by granting you exposure to approximately 8,500 stocks spanning the globe, with the exception of those domiciled in the United States. While you may be familiar with some of the companies it invests in, such as Taiwan Semiconductor Manufacturing Company Limited, TSM, or Nestle, these major players aren't included in ETFs that solely concentrate on the US market, like the S&P 500 or NASDAQ funds. Vanguard Total International Stock affords you the opportunity to tap into renowned global brands that operate beyond US borders, a prudent move for your long-term investment strategy. Number 6. Vanguard Total World Stock ETF. Consider exploring the Vanguard Total World Stock ETF as a potential investment opportunity. This ETF boasts a substantial $33 billion in assets and comes with a modest expense ratio of 0.07%. What makes Vanguard Total World Stock particularly appealing is its broad exposure to a diverse array of stocks from all corners of the globe, encompassing nearly 10,000 individual stocks within its portfolio. Primarily anchored in U.S. equities, which constitute 60% of its holdings, Vermont also embraces stocks from developed economies like Japan and the UK, alongside emerging markets such as India and China, while sectors like technology and finance take center stage, making up around 23% and 15% of the fund, respectively. Vanguard Total World doesn't play favorites. It offers representation across all sectors. In essence, Vanguard Total World presents itself as a well-rounded investment choice, suitable for those looking to hold onto their investments for the long haul. Its expansive reach across various markets and sectors makes it a versatile option that can weather the storms of fluctuating market trends. Number 7. iShares Core U.S. Aggregate Bond ETF. Consider adding the iShares Core U.S. Aggregate Bond ETF to your investment mix. It could be a smart move. This ETF boasts a hefty $101 billion in assets and charges a mere 0.03% expense ratio, making it a cost-effective choice for expanding your investment beyond stocks. iShares Core is noteworthy for being one of the biggest bond exchange-traded funds around, sitting comfortably among the top 15 ETFs on Wall Street overall. Its strategy of bundling various types of bonds into one aggregate package gives investors exposure to over 10,000 bonds, spanning government and corporate issuances of high credit quality. Currently, iShares Core offers a yield of 4.3%, a substantial advantage over the S&P 500's meager 1.5% yield. What's more, it tends to be less volatile, providing a smoother ride for investors. If you're on the lookout for a dependable, long-term investment opportunity, iShares Core definitely deserves a spot on your radar as a core ETF for your portfolio. There you have it, folks. It's clear that these 7 ETFs offer a solid foundation for anyone looking to build wealth over the long haul. Whether you're just starting out or you're a seasoned investor, these options cater to a range of investment goals and risk tolerances. But before you rush in, remember that investing always carries some level of risk. Market conditions can change, and past performance is not always indicative of future results. So it's essential to do your own research and consider consulting with a financial advisor to ensure these ETFs align with your specific financial situation and goals. That being said, if you're ready to take control of your financial future and embark on a journey toward long-term growth and stability, incorporating these ETFs into your investment strategy could be a smart move. So, if you found this video helpful and you're eager to learn more about investing and managing your money, don't forget to hit that subscribe button and turn on notifications so you never miss out on our latest content. And remember, the key to successful investing is patience, discipline, and staying informed. Thanks for tuning in, and happy investing.